Okay, MegaWhale team, welcome back to the channel and thank you for tuning in. Bitcoin has seen a breakdown of that daily horizontal consolidation between 108,000 and the critical high time frame level of resistance at 110. We have seen the price break through that lower range support, resulting in a correction back to 106,000. In today's video, we are going to be discussing what this correction means on the short term and the potential macro consequences of this correction toward the downside. We are also going to be taking a look at the total altcoin and total cryptocurrency market cap, as both of these charts has as well seen large pullbacks. And finally, we'll be discussing the upcoming economic news and of course, the relevant market data. Before we go ahead and get into it, make sure to smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, just pure raw TA. If that is the kind of content you are interested in, you can also join us on Telegram. This is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. And if you are interested in joining our VIP channel, you can do that by clicking the pinned comment of the free channel, contacting our admin, checking out a 50+ month trading track record, or watching a 10-minute video showing you inside the channel. You'll get access to our main trading channel and our exclusive group chats with over 700 members. We'll love to have you in there. Let's go ahead, guys, and jump into the content. So as we can see, and as we discussed in our video yesterday, the breakdown of this horizontal consolidation was going to be the trigger for Bitcoin correcting back down to this major level of high time frame support sitting around that $106,000 region. We have seen the breakdown and we have seen the correction. In fact, the correction actually took us through this high time frame support and into that next level of support, which is going to be actually the daily high, that prior daily higher low before we then before we then saw the correction into that $100,000 region. So we're actually currently retesting a level of daily support. Now, the reason this move is so significant is because it has resulted in that weekly candle pushing back underneath that prior green opening price. We know that to be that 106.4k level, that major trigger point that we need to close a weekly candle above to avoid the possible breakdown of the 62.09 and that bearish divergence developing any further. So we are back in this high risk zone. If we're going to go ahead and categorize these zones, we have got our bearish zone, which is underneath the range high. We've got our high risk zone, which is between the range high and 106.4. We have got our looking good zone, which is above 106 to 108. And then of course, we've got our bullish zone, which is pushing into new all-time highs. So we're back in that high risk zone. We're discussing that in today's video. Moving over to our liquidations and our market volume over here. Let's refresh this page, both of which should be up for the 24-hour period. We have seen a relatively large move. In fact, actually, volume is down 4.5%, which is actually quite surprising to me, sitting at 271 billion. Liquidations up a significant 114% at 645 million, with 583 million of those liquidations coming from long positions, of course, as Bitcoin drops toward the downside. In fact, looking at this order right over here, the single largest liquidation happened on Binance for a value of $201 million. That is one crazy liquidation amount. And whoever that was, you're probably not having a very nice day. So that is a brutal liquidation from one order there. 33% of total liquidations just coming from one position. Absolutely insane stuff. Let's move over, guys, to take a look at our DXY. The DXY is dropping as anticipated. Again, ever since that breakdown of 100, we've been telling you we are looking for 93 to 92. That is still going to be 6 to 12 months away. Well, now about 5 to 11 months away. Overall, this is essentially not really a perfect date expectation, but what is it trying to tell you? It's trying to tell you we're expecting this to happen in quite some time. We don't expect it to be an immediate thing. We expect it to draw out for probably the rest of 2025 until we come down into this region. Again, how fast that happens will be very much dependent on what happens with interest rates, particularly when they start cutting and how aggressively they actually cut when they begin. So that is going to be something that impacts the direction of the DXY. Of course, we do have the S&P 500 over here. We did run the risk of potentially developing a bearish divergence, and that bearish divergence is still potentially developing. So we have this triangular pattern here developing on the RSI of this uptrend, retesting respective lows, and of course this downtrend here with respective highs, signaling a period of consolidation and indecision for the price action, essentially just a degree of exhaustion developing in this uptrend with a potential bearish divergence developing. And if we do see the breakdown on the RSI, that could result in a correction back to the 50 EMA. However, if we are able to break upwards, we will absorb the selling pressure, absorb that exhaustion, and that is going to be the trigger for a large rally, hopefully, what I believe to be into a new all-time high. So overall, macro is still looking good. I think the market is waiting for interest rates in about 5 or 6 days from now, and I think we are going to be definitely waiting to see how that develops to have a clearer understanding of where this chart is going to be going. But if we're looking at the general high time frame, it is looking good, besides the fact that we have a little bit of exhaustion developing over here for the first time since these lows. Moving over to the upcoming economic news, of course, the next big one, guys, is going to be that interest rate release, currently 99.8% in favor of a interest rate pause. So look, the probabilities we see interest rate reduction is very, very low. The best case scenario here is that Jerome Powell, during that Federal Reserve press conference, talks about how there is more certainty around the future economic projections. If he mentions more certainty or less uncertainty, that is going to be directly assumed to link towards the fact that they are more confident in their decisions for future interest rate reductions, which will result in the market rallying. Now, the worst case scenario is they still remain on the fence, which is what they've been doing for the last 5 or 6 months, which is saying we are unsure of how the economic climate is developing as a consequence of tariffs, and therefore we are waiting and seeing. If they play the wait and see approach again, we could see the market continue toward the downside. So pay attention to that. But nevertheless, with that being said, we'll get into the rest of the content. Like we said, Bitcoin, large correction here, a lot of liquidations into a daily support. What does this mean? Where is it going? What are the levels to watch out for? We're discussing that in a second. Before we get into it, make sure to go ahead, guys, and sign up to BitGet, BitUnix, or BingX. The exchange links are down below. You've got a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume. You'll go to support me making this content, and most importantly, support yourself in your trading journey, trading on exchanges I use and I trust. To go ahead and check it out. We'll play an ad and we'll get right back in. If you are looking for a new exchange or just want to support the channel, sign up to BitUnix with the link down below. You'll get a lifetime trading fee discount of 15%, which can build up to 45% based on your trading volume, as well as access to a bonus reward center, and of course, all of the exclusive campaigns we run on this exchange. You'll also get access to BitUnix being a non-KYC exchange, meaning you can sign up from anywhere in the globe without regulations. And most importantly, I only promote exchanges I trust and I use. As you can see, I trade on BitUnix very regularly, being the highest VIP level with over $500 million in trading volume for the last 30 days. And lastly, if you were interested in signing up to our other 2 exchanges, BingX or BitGet, you can also do that via the links down below. You as well will get the 15% trading fee discount and everything else that comes with it. Go ahead and sign up. Thank you for supporting. Let's jump back in. Okay, team, let's go ahead and get right back into it. So, as we can see, some very, very alarming signs here for Bitcoin. First and foremost, that $110,000 level, as we mentioned in yesterday's video, essentially that final level of resistance, that last line of resistance we had to break through to see not only Bitcoin go up, not only the total cryptocurrency market, not only the altcoin market, But Ethereum as well, we had to break through 110 to see the market initiate that next leg upwards. Unfortunately, we rejected from 110, entering a horizontal consolidation. Now, the point of a horizontal consolidation is to try absorb any sort of selling that is occurring at these levels. Unfortunately, the price action broke toward the downside, indicating that the sellers were in control. That resulted in the price now flushing all the way back down to our next high timeframe supports, and we are still seeing that price correct. So with that being said, 110 has officially obviously been rejected from, and now the sellers are back in control of this trend. The question is, how far could they push it? What does this mean, and what do the bulls need to do? So let's start by taking a look at the key levels. So as we can see here, the key levels are marked out by our gray horizontal boxes. And I think the most important key level besides 110, which we know to be important, is going to be this current level of resistance, or current level of resistance, yep, 106.5 to 106.9. Now, the reason this is so important is not because we've seen explosive reactions when we've broken through it or broken down from it, is because of where it corresponds to on the weekly chart. Moving over to the weekly, we'll start on the weekly. When we're looking at this level and where it corresponds to this horizontal line over here. Now, this is sitting around 106.4, so around smack bang in the middle of that level. As we mentioned in our intro, below this level on the weekly, we are sitting in the danger zone. Now, the danger zone here is essentially a zone of weekly indecision where the price on the weekly has the possibility to reverse in either direction on the macro scale. So whatever direction it decides to move into, it would be a large directional move, which would likely extend for multiple weeks. So it would be upward or whether that be downward. Now, when we're looking at the upward direction, of course, the trigger point we needed to resume this upward trend was, of course, 110. The 106 level was the level of short-term resistance, which facilitated the move to 110 and increased the probability of a weekly close below that weekly range that we need to close above. But we have now seen rejection and correction back through that level. So not only does that decrease the potential for a weekly close to occur above this black solid line, but it also goes to now increase the possibility of what we would call, again, a deviation setup. So again, until we close a weekly level above this black line, the potential bearish risk factors that we were discussing last week are still in play. That being, number one, the close below the weekly range high, resulting in deviation from the range, resulting in a correction toward the downside, exacerbated the fact that we have our bearish divergence. So when we see a bearish divergence and deviation from a range high, that is generally going to be a reversal setup, meaning the price is more likely to continue toward the downside. Then if we factor in the fact that if we close below the weekly range high in 3 days' time, we see a breakdown of the 62.09 on the RSI. Now, as you guys already know, the breakdown of the 62.09 on the RSI historically has resulted in corrections for Bitcoin of 10% or greater. 8 out of the 9 times we have seen the breakdown of the 62.09 over the course of the last 10 years. So we go to the weekly chart and show you a couple scenarios of that, okay? We're looking at these vertical lines. I'll draw them in. We have got this level over here. Of course, it closes below. We've got this level over here. Okay, we're looking for closes below this level over here. We'll go one more, this level over here, and one more, this, we'll do another one. We'll go back to 2021, okay, and this level over here. So what we can see, guys, is historically, when we have seen the RSI close below that 62.09, we have seen corrections of Bitcoin. This was a 27%. This one, a 18 to 20%. This one, again, 20%. This one, again, nearly 20%. This one was around 70%. This one over here, we saw a correction of 48%. So historically, we have seen large macro corrections for Bitcoin of upward of 10% when we close below the 62.09. So that is still a risk factor. That is something we have to be concerned about while we are underneath this level. Now, if we look at the short term right now, we can see Bitcoin almost by the dollar over here. If we just zoom in and get this perfect, we've almost by the dollar bounced from that weekly range high, and you can see the amount of volatility, even the short term, hundreds of dollars jumping up and down, even as we're speaking now, as volatility is going to increase as we come to these levels of significance. But what I'm trying to say, guys, is while we have this red candle print, while we are underneath this 106.4 level on the weekly, these potential risk factors which could push the price back down. We're looking, the 50 EMA, we're looking the Gaussian channel upper band, we're looking this cluster on the VRPV 97 to 94,000. These levels become real potentials if this weekly candle closes bad in 3 days time. So let's now go to the short term and discuss what is happening, because a lot has happened here on the high time frame. So this is going to be the short term chart, guys. And as we talked about a few weeks ago, a few days ago really, and we'll talk about now again, the key levels we need to see Bitcoin hold above to avoid a terrible weekly close is going to be, again, this level here, which is 106. And if we're looking at the second level, ideally, if we go down to a smaller time frame chart, we would like to hold above this level here, which is going to be that 103.1. I'm going to go ahead and zoom in a little bit more just to get a little bit more clarity on this chart. This is going to be that 103.71 level. In fact, let's go back out to a 30-minute. I'm trying to line up that visible range volume profile with this historical price action. Here we go. We can see a little bit better here. The VRPV slightly shifted over the last few days of this large rally toward the upside. But as we can see, if we're looking at this level here, the visible range volume profile dramatically drops off below. So if we drop below this 103 level, there's almost zero chance Bitcoin is going to close this weekly candle bullish. Okay, so ideally in the next 3 days, we're able to bounce somewhere through this region and get back above to close that weekly candle bullish and avoid that 62.09 breakdown in the RSI, avoid the deviation setup. Otherwise, these two factors come in play and we run the risk of steeper corrections. Hypothetically, if we were to see those bearish scenarios play out, where could Bitcoin move to? So going over to a 4-hour chart really quickly, we're looking at that visible range volume profile. We're looking at prior levels of high time frame support. So particularly looking at this 97,000 to 94,000 region. So somewhere within this region, if we were to continue toward the downside, that would be worst case scenario for Bitcoin. Let's talk about the best case scenario. Now, I'm not seeing too much here for best case scenario. It is looking incredibly dire for Bitcoin. We're pushing back into these volume ranges over here, pushing back into these historical levels of support after breaking down from some critical levels. For Bitcoin to reverse here, it's going to take a lot. We need to find a level of demand. If we're looking at the price action, we've got this level of liquidity sitting around about, 103.8 to around about 103.7. We do have the potential to come back down into this region to bounce. But again, the short-term price action is seeing so much short-term volatility, it's very tricky to pinpoint where this is going to reverse from. If I were to guess, I would say somewhere around that $104,000 region for a best chance of a reversal. Until then, it is looking pretty dire. That is it, guys, for the short term. I wish I had more to say. Of course, the most important thing right now is not really what's happening, but the potential high time frame impact that what is happening in the short term will have on this high time frame chart and how that develops moving forward, particularly into the weekly close, particularly into the upcoming interest rate decision. So we'll go over the key levels one more time, and then we'll go over different charts. 110 we need to break above to go into a new all-time high and to be exceptionally bullish. 106.5 is where we need to close a weekly candle above to avoid any downside weekly risk. If we remain underneath 106 moving into a weekly close, we run the risk of having to break down to the 62.09 and thus seeing a steeper correction for Bitcoin, potentially breaking these lows and correcting sub 100,000. Worst case scenario, okay? If we're looking at the rest of the cryptocurrency market, such as Ethereum is also sitting at that high time frame resistance. We said we would likely see a correction from here. We did a video on this a few days ago. Again, for Ethereum to push into 3,000, we need to see Bitcoin break this high, okay? And while we are sitting underneath these levels, the probability of that is diminishing. So a lot to pay attention to, a lot of concerning things happening, a lot of high time frame potential consequences if this weekly candle goes astray. and if the price action continues to develop how it is developing toward the downside. We're going to leave the video there, guys. Hope you enjoyed. Hope you have a fantastic rest of your day and tomorrow, and we'll catch you guys on Sunday. Hopefully on Sunday, the day before the week close, we have had a lot more clarity in the price action with either continue down to confirm we are going to be having a bad week close. We're going to discuss our next targets, or we've bounced and, we can talk about that then. So I'll catch you guys on Sunday. Have a great rest of your weekend. I'll see you then. Bye.